Rail stocks on a tear today after CSX exceeded estimates after cutting expenses. CSX shares up about 7% in trading today. This is Taking Stock on Bloomberg. I'm Pim Fox. The transport industry, railroads and trucking, been clobbered by the recession. So what's the outlook? Let's bring on an expert. We've got Jason Seidl of Dahlman Rose. Jason, good to have you with us as always.
Thanks
all right, step back. We'll do the macro thing first. What's the state of the transport industry right now? Railroads first. How they doing?
Well, the railroads are obviously still struggling right now, Pim. If you look 2Q from 1Q, the volumes have actually taken a little bit of a step down. Now, most of that's due to coal. A little bit is due to the intermodal side. The coal is really due to a lot of the utilities across the U.S. They've been building up stockpiles, and we've had a pretty cool summer, and natural gas prices have fallen to dramatically low levels. So obviously, less being used, less being shipped. Also on the export side, coal, that's also drastically down on a year-over-year basis because the demand for steel from Europe, that's gone down. And also the European power producers are needing less coal to burn for their energy needs as well.
All right, so the railroad industry, if we got them all together in a room, probably not the happiest bunch of people.
Well, I don't think they're seeing a lot of the proverbial green shoots, if you will. But, you know, I think they're optimistic in terms of the 2010 year that the volumes are actually start showing some rebound. Now, the volumes are going to get better at the end of the year, but I think that's more of a year-over-year comparison basis.
Right, I was going to say, that's simple arithmetic because of last year's performance.
Right now, there are some minor things that could provide a kicker, if you will, to rail volumes in the back half of 2009. You know, one of which is an anticipated increase in production from the automotive sector. Not only is that going to be a boost for finished goods, but you also see a boost on the steel side as well for the railroads. Now, the other thing is some of the utilities in the beginning of this year have not actually taken on all that they have contracted for in coal. So there might be some makeup shipments in the back half of 2009 for some of the railroads.
All right, so it sounds like a little bit like they got their fingers crossed for the rest of the year, but maybe 2010 going to be a little bit better. What about the actual stocks? What's the investor perspective right now? Which stocks do you like?
Well, you know, I think the investors have to take a long-term view on any of these stocks in the transportation sector if you're going to be putting money to work today. Now, the reason why we at Dahlman Rose like the railroad sector is that, you know, given that we're in sort of the worst transport recession we've seen in decades, the railroads have actually fared fairly well. You know, CSX today posting numbers, 72 cents. Part of that is helped by some an 11-cent lower casualty insurance reserve cost. But again, when you look at the year-over-year basis, still a decent job by CSX. Now, when you look at 2010, you get some volume back, pricing's good. Their operational performance has been improving. I think you can see margins expand significantly and earnings grow as well.
All right, so the idea is buy them when they're down.
Absolutely.
Who's the favorite in the bunch right now?
Well, our two favorites right now, I think, are both CSX and Union Pacific. I think they're two stocks with a lot of operational improvement left in the tank, if you will. Now, CSX, if you look at what they produced today, a 72-cent number, you're looking at coal picking up in the back half of the year. You're looking at even, they said, export coal might be picking up as well. You're seeing CSX post very strong pricing numbers, 6.6% in the current quarter. They've actually taken their expectations for the full year from a 5 to 6% pricing up. Now, you wouldn't guess that in a down economy, would you?
No. And let me ask you then, can we apply that same kind of philosophy to what's going on in the trucking industry right now, or is trucking just so concerned with what's going on at YRC?
Well, I think you have to split the trucking industry up, right? You have to split the LTLs from the truckloads, but both are seeing tremendous pricing pressure right now. Now, the LTLs are seeing pricing pressure because a lot of the companies are actually trying to force YRC into bankruptcy by trying to steal their business. How are they doing this? They're cutting the rates. YRC is sort of in a desperate situation now where they have to rely on several people out there to get them through, sort of to build the proverbial bridge to the other side of the economy.
The Teamsters being one of those groups,
Absolutely.
Right? Is this a Teamster-owned company?
Well, it's going to be. I mean, we already had the Teamsters with 20%,
the options, I think, right?
That's on top of 15%. So you're talking the potential for the Teamsters to own 35% of this company. Now, the agreement that came out today, we're going to need ratification from the rank-and-file membership. I believe that's going to happen sometime before the end of this month. Now, just the pension agreement alone could save them about $630 million. If you look at the other agreement, we could save them, you know, in terms of the wage rollback, that could save them close to another $200 million.
So we got a little bit of wiggle room here.
Well, I think this is the beginning of the Hail Mary pass, and you needed somebody to do the blocking to get the quarterback to throw the ball, and I think this is the Teamster move. You know, the quarterback has to make the right pass, and I think that's the customer sticking with YRCW. And the actual catch being made, well, that's going to be the banks and the bondholders working with the company as well. So a couple things need to happen for YRCW to survive.
All right. I want to thank you very much. Jason Seidl coming in from Dahlman Rose. You're liking Union Pacific, UP, as well as CSX. And, of course, we've got to watch what happens in the trucking business to what goes on to YRC. Thanks very much for coming in, Jason. Always a pleasure.